Welcome to CryptoBanter.com. I'm CryptoManRan, and I come to you every single day at 10 a.m. EST. And I bring you crypto love, and together as a community, we make lots of money. But it's not 10 a.m. EST. It's way earlier than 10 a.m. EST. In fact, wakey, wakey, rise and shine, New York City. It's 8:30. It's freezing cold outside. But there's so much going on in the markets. So much. I mean, just look at this. How many of you have been watching this BNB token and the BSC chain and everything else that's going on around it? I mean, this is one of the biggest runs that I've ever seen. And this is not a new token that was like listed yesterday or a week ago. This is a 4-year-old token moving parabolically like this. But that's not the discussion for the show, because that's a discussion which we're going to be covering in my show later on today, which starts at 10 a.m. EST, because now it's all about saving your crypto with your host, Alex MASHINSKY. Alex, welcome back to Save Your Crypto, or Save Our Crypto. How are you doing?
Great. Look, Bitcoin all-time highs, BNB pumping. It's a great way to wake up, and seeing new highs for everything, And, we just don't know how long this ride is going to last. The music eventually is going to stop. We just need to be ready and don't get caught not putting some money on the sidelines because the way up could also be the way down, right? That's not so much fun when you're going on the way down every morning.
Wow. So much to talk about. But before we start talking about this, guys, I need you guys to do us all a big favor. Smash the like, smash the subscribe, smash the bell button. And as you can see, we come to you with new shows each and every day. And if you want those shows to be circulated amongst your friends, what you got to do is you got to smash the like and smash the subscribe, because that's how we share our crypto love with the crypto community around the world. That's the only way to do it. So we're counting on you for likes. I see there's more and more people coming in through them. Alex, I want to talk to you about what's going on now, because it's starting to feel a bit toppy, starting to feel a bit, I don't know. Everything's only going up in a straight line all the time. Everybody is talking in multiples of X's. Wall Street talks about a 10% return for the year. We talk about a 10x return for the 40-minute period. Scary or not yet?
Well, I would be much more concerned if not for two things. One is there's $1.9 trillion worth of stimulus. It hasn't hit us yet. So we know there's at least one more shot that we're going to get of new money, right? And we know that a big chunk of that is going to find its way to the stock market and into crypto. And so I think that we're not at the top yet. Also, if you go to Google Trends again and you look at Bitcoin or Ethereum, you will see that we're not higher than 2017, meaning this run up is not retail. It's a mix of institutional, corporate, and so on. And the good news is that the institutions and the corporates are long-term holders, so they're not going to dump when they get nervous. So I think, yes, that we're going to have a top and we're going to have a correction, but I think it's going to be at higher price levels.
So fair to say that the institutions are much better holders, and fair to say that if they are going to be dumping or speculating, they'll probably do it on the CME because it's cheaper transaction fees. It's just a more efficient, much more faster way of speculating on Bitcoin than actually buying and holding and custodying the assets if you're an institution. So I think I agree with you there. But couldn't it be that the reason why the searches on Google aren't going up is because a big part of those people already searched Bitcoin in 2017? They know what Bitcoin is. And when someone searches Bitcoin, what is Bitcoin, how to buy Bitcoin, that's usually people that don't know what it is, i.e. new people.
Yeah, I mean, there's definitely some of that, but still, this wave or the hype around Bitcoin this time is much bigger than it was last time. And most of the people in the world have not bought Bitcoin or transacted in Bitcoin or know what Bitcoin is. So you would still want to see, probably considering how much bigger this wave is from 2017 or 2014. I think, I think you would see much bigger numbers in absolute numbers. So all I'm saying is, look, there's still great adoption, but all I'm saying is that this is not led by retail. It's led by corporate and institutions, which are buying in giant gulps. Like, look at Michael Saylor, right? Keeps raising 600 million, 900 million, right, and so on. So, and why is he buying, right? Because he's the one educating corporates, and he knows how many of them are agreeing to dive in, and he's basically buying in front of them, right? He's front running his own kind of like promotion and his own marketing to corporate CFOs who are considering buying some for their treasury.
But I mean, that's cool. Isn't that what the Bitcoin community is about? Isn't that part of the genius of the design of Bitcoin, which says that every participant in the network adds value to the next network to grow the network exponentially? And what Michael Saylor is doing, and I think he's a genius, he bought it, and now he's dedicating his whole company, or big parts of his company, to educating other corporates on a mass scale as to why they should be doing the same. And he managed to get Elon Musk over the line. I mean, we know now that, he was instrumental in getting Elon Musk over the line. And I think we have some scoop that there are a couple of others coming, including one of the major computer manufacturers in the world.
Yeah, so we all doing the same thing. I agree with you. I'm not saying it in a negative way. I'm just explaining, like Michael Saylor, MicroStrategy just raised another 900 million. This is on top of the 900 million they already did a few months ago. So the only reason he would be doubling down at 52,000, right? He's buying it at market, is because he knows that there are so many other corporates coming, and he knows it's a pretty safe bet because he's taking debt. Remember, he's raising debt and he's buying Bitcoin with it. It's like you taking a mortgage on your home and going and buying Bitcoin. It's kind of like the equivalent, right? So it is a risky move. This is not what we usually talk on the show, where we say, hey, only invest what you can afford to lose.
What if this all goes wrong? I mean, I asked him when he came on my show, I said to him, Michael, what if this whole thing actually goes wrong? And he couldn't answer the question. He said, well, you never get into something thinking that it can go wrong. But I mean, the guy's worked his whole life. He's been, he's had MicroStrategy, and he's the longest director on any, I think he's the longest director on any NASDAQ listed company currently. And his entire balance sheet is in Bitcoin. In fact, he's leveraged now in Bitcoin. He's all in. What if this goes wrong? I mean, we don't think it'll go wrong. Logically, fundamentally, mathematically, we don't think this is going to go wrong. But I mean, there's always a chance. Alex, you've been around for a while, and I'm sure you've seen many things that were supposed to go 100% right and they went wrong.
Right. So look, debt is debt, and the debt holders are going to want the money back. And if it trades at a discount, meaning if Bitcoin crashes and his average is below, he's basically lost money, he won't be able to pay back the debt, and the debt holders will be confiscating those assets. So the Bitcoin is going to migrate from MicroStrategy to the debt holders, and then we have to see, are they going to liquidate it or they're not liquidated? But that is, a few years down the line, because that has to go through the courts and things like that. So he's placing a one-directional. He's placing one-directional bet. It's not like it's a hedged position. This is long only. And the interesting thing is that the debt holders who are starving for yield are willing to risk their money as well under these circumstances. So the
debt holders know that
yield are willing to risk. Sorry?
I say the debt holders know that they loaning money to a company that's all in on Bitcoin. They know this. This is not new.
That's right. That's right. Yeah. So and when you have a big business, and like Elon Musk has a big business called Tesla, and then he has $1.5 billion in crypto. Now MicroStrategy has a little business called MicroStrategy and a giant position in crypto. So really, they're in the Bitcoin business. They're not in the AI or machine learning business, which is a giant position in crypto.
Yeah. So look, I imagine that if you look at the MicroStrategy business, and I was looking at their numbers, that company probably makes on average $20 to $30 million a year in profits. I don't think any investor is getting into MicroStrategy now because of the business intelligence. I mean, they are buying into a Bitcoin long-only hedge fund with a marketing engine that is marketing Bitcoin, and that's it. That is really all they're buying.
I agree with you. I think both MicroStrategy and Tesla made more money from Bitcoin in just a month than they did in their history. Okay, so Tesla made more money on that $1.5 billion than Tesla earned in its 17-year history, and MicroStrategy in its 25-year history. That's how much. So the reason these people are excited about it is because they all realize what we realized for the last 10 years, is that creating appreciation in a scarce asset is much easier than earning income from an ongoing business, right? And that's why the rest of the world is just now starting to learn or understand this, but we've been sitting on our hands for that reason, because all you have to do is, again, educate others. You do that, I do that, Michael Saylor does that, right? We do that every day. And if they decide to come in, they make our Bitcoin more valuable.
You know, the reason why I'm laughing is because MicroStrategy made more money this year than they've ever made in their entire history. Tesla made more money in the last month than they've made ever in the entire history as a car manufacturer. But most people watching this show, and probably including you and I, have made more money this year than we've made in our entire histories. So we're not, the cycle's not that different. I think we've all just gotten it to the right thing at the right time. And I guess by doing what we're doing, which is things like this, teaching more people about the space, we are actually playing a big part in growing the community. And I think we're all very early. I think MicroStrategy is early. I think Tesla is early. I think Celsius is very, very, very early. I think that Run is early. I think we're all early.
Yes, I agree with you. So there's definitely no need for 15,000 different coins and tokens. And I think this year, next year are going to be pivotal years for the projects that create value. You can see BNB basically solving the problem with high transaction fees on Ethereum. And you see dozens and dozens of copycats of Uniswap and Aave and Compound popping on the Binance chain, and the BNB token is benefiting from it. So what I'm saying is that a lot of these projects have a second and a third life if they can hitch themselves to the right train. And that's the beauty of crypto, is that there's a new train coming every 5 minutes. You don't have to wait long. You have NFTs, you have stable coins, you have obviously DeFi, you have all these other things happening, and you have the granddaddy Bitcoin still chugging along after 13 years, delivering amazing returns compared to Wall Street or any other platform.
So I don't want to go on with all the stuff that we have to talk about, but let's for 1 second just talk about what happened with the Binance token or the BNB token in the last week, the last 24 hours. I don't even know which way to look at it, but I mean, that's the chart. I mean, look at that. This is absolutely, absolutely, absolutely parabolic. Scary or not scary for you?
Looks just like Celsius, you know?
Yeah, well, yes, it does look just like Celsius, but with respect, Celsius went up much slower. It went up gradually. It achieved the same effect. Here we're talking in the last 30 days. In the last 30 days, BNB is on 15x. 10x.
Yeah, it's a number 3 coin today, and I have to take my hat off to CZ because I was pretty skeptical that when he announced that he's going to create his own chain and he's going to migrate projects there and so on. I was like, come on, we have so many chains. We have Cardano, we have Polkadot, we obviously have Ethereum. What are the chances that these guys are going to kill it? And I was totally wrong, because I did not anticipate the Ethereum fees being between $50 and $100, and that's all you need, right? I mean, basically the average person cannot afford to transact on Ethereum today. You know, the whales have no problem. When you do a $1 million transaction, paying $50 doesn't matter, but for the average person who's coming in, so that really gave it an amazing opportunity. And I think, again, the BNB business model is to pay 20% of the profits to the community. So the more transactions running on the network, the more profits for Binance, the more profits for Binance, the more buybacks they're going to do. And people are basically betting that the network is going to generate these amazing returns, meaning BNB is undervalued. Similar to Sell Token, but just 100 times bigger, you know. So we got to copy that and chase BNB now. That's our model.
Well, you've got a big milestone. They number 3. I think you are in the top 20, but certainly not number 3. We're actually going to be talking later on my show, 10 a.m. EST, around the new Binance ecosystem and how to find those BSC gems. I don't think anybody wants to miss that. That's going to happen at 10 a.m. EST. But Alex, let's get on with the things that we wanted to talk about. And that is, I mean, I guess the first thing is, I don't know if you've noticed the explosion in the Bitcoin mining stocks. I mean, these things have also gone pretty parabolic. Actually, in fact, have a listen to this. This is an interview that I know both of us watched around on Fast Money from CNBC. Let's take a listen quickly.
Talk to us about your companies, your stocks rise. And you know, we pulled some stats. In the past 6 months, Riot Blockchain is up 1,500%, while Bitcoin is up 300%. Can you walk us through why Riot Blockchain would have such leverage to the Bitcoin rise?
Yeah, so over the past 12 months, Riot has put a real focus into growing its hash rate. And to the viewers who don't know what that is the computational power that a miner has, and it is what they need to help get a portion of the fixed Bitcoin block reward. So while the Bitcoin market was not that strong for all of 2020, we really put our head down and put a real effort into securing miner purchase orders that were during 2020 that would not be delivered until 2021. So we invested that capital because we perceived a market opportunity in the future similar to what we're seeing now. So now when the market is taken off and is quite hot, it's difficult to get mining equipment right now. And we're fortunate to have made that investment in the past, and now we are deploying hash rate. We are growing mining power at a time when there's real opportunity for Bitcoin mining.
Wow. Okay. So mining stocks are flying 1,500% in the last year. What do you make of that?
Yeah. So I don't know. Look, it's a great time if you invested in mining equipment and facilities. It's not just the equipment. You need the electricity. You need other things to really make it work. But if you invested in that in 2020, you're ripping the rewards today, because the average cost today to generate a Bitcoin, if you invest in 2020, is about 8,000. And obviously, you're getting an asset instantly that's worth 50,000 or more. So the gap there, because the spread is so great, that is, again, driving the stocks of the public companies. So you can buy Bitcoin in one of certain ways, right? You can buy it directly on an exchange. You can go and, for example, piggyback on MicroStrategy and buy their stock, or you can buy a mining stock. And if you're buying a mining stock, you're betting that the miners will continue to generate these kind of profits, and you're effectively going to benefit from it as well. So it's a derivative play on the traditional mining business. So, Celsius, we announced that we both bought thousands of machines ourselves. So we have about the same hash power as Riot.
Whoa. You have the same hash power as Riot.
Yeah, you have a scoop here. I have not announced that anywhere else. So Riot
Celsius has the same hash power as Riot. Riot is a listed company on the stock exchange that has gone up 1,500% in the last year.
So yeah, so they have about they were trading at a $5 billion valuation. I'm not sure I can basically justify that, but Celsius we announced we invested in Argo blockchain. We've made several other investments, and besides that, we also operate our own equipment. So altogether, we have more hash power than Riot.
That is absolutely incredible. I mean, that I didn't know that about Celsius, to be honest. But anyway, this show is not about Celsius. Would you say that getting into the mining stocks is a good play at the moment, or do you think that anybody who's buying in now has missed the boat?
Yeah, I think it's probably late, because you have to understand that it's right now the gap is huge. Maybe you're making 40,000 per Bitcoin, but as everybody adds hash power, it's the same number of Bitcoin every 10 minutes that is created, and now it's going to be
6.25.
exactly. So every 10 minutes 6.25 Bitcoins are created, and they're distributed among all the miners all over the world, right? And all the mining pools and so on. So, and as more and more companies are adding, doubling or tripling, quadrupling their mining hash power in exabytes. I mean, these are like, like we're not talking about just few computers. These are like giant buildings full of these miners. So as that hash power increases, it's harder and harder and harder to earn that Bitcoin, meaning your cost of Bitcoin that used to be 8,000 goes to 12, 15, 25, 35, and so on. So the margin actually over time is decreasing. And that's why I think it's going to be, for anyone who's coming in now and buying in at the peak, buying Riot at $5 billion valuation, is probably going to take more risk than reward. And it's all about risk and reward.
I must say, I'd be very careful buying mining stocks now. I think, again, he said it himself. He said buying mining equipment now is very expensive. It's very difficult to get your hands onto mining equipment now. So probably not the best time to be buying stuff like that. Let's go on to the next one. And this is something that I know you know the answer to, but DeFi rates are exploding. I mean, what am I getting today at Celsius on US dollars?
Yeah, so you can earn almost 17%, 16.75% if you're earning in Cell, and
16.75%.
Yes, and 12.5%. Sorry,
wasn't it 10 a week ago?
It was 10 in kind, and that 10 went to 12.5. But 10 in kind was about 13 in Cell, and now this 13 is 16.75. And the 10 is 12.5. So we offer two ways. One is you can earn USDC on USDC or USDT on USDT, or you can earn it in Cell token. So the reason, and it's not just us. I mean, if you go to Aave or Compound or anywhere else, you will see that the rates have exploded. And when we launched Celsius in 2017, the rates were 6%. And everybody told us, oh, that your rate is too high. It will not be sustainable. And every year, every quarter, we've been raising rates because the reason is that the traditional players, the Goldman Sachs, the JP Morgans, the Morgan Stanleys, are not participating in these markets. So there's scarcity of dollars. There are very, very few lenders like us who are lending billions of dollars into this market. And basically, if there's more demand and less supply, Celsius just increases the rate that we charge, and when we increase the rate, we also pay more. We pay more to our community, right? So it's back to back.
I get that, but where is this? And let's not talk specifically around Celsius, but where is all this demand for US dollars? Why is there such an insatiable demand for US dollars? Who needs these US dollars and doesn't have them and is willing to pay X percent, which is above 10%?
Yeah, so the two largest borrowers are institutions and exchanges. So let's take an exchange as an example. If I'm offering my customers to buy on margin, meaning I have one Bitcoin on Binance and I'm trying to buy a second Bitcoin using my first Bitcoin as collateral, somebody has to provide those dollars. Now, Binance may have $1 billion or $2 billion or whatever, but they don't have 10 billion or 20 billion or 50 billion. So when you look at the volume of, so somebody has to provide those dollars, and because these customers are willing to pay crazy rates, they're sure that Bitcoin is going higher, they're willing to pay 25-30% a year. So effectively what happens is that we supply, or other people supply, the liquidity to exchanges and institutions, and basically it finds its way to the average retail guy one way or another who's trying to buy a margin.
So can we expect this trend to continue even if a bear market comes? In other words, even if we get a correction, do you still think that this trend of this insatiable demand for stable coins will continue?
Well, I think the demand will continue, but the rates are definitely going to come down. Right now, because DeFi is looking for stable coins, exchanges are looking for stable coins, institutions are looking for stable coin, you have almost like triple the normal demand. So I think the kind of like the going rate, the average rate for stablecoin is the 10 to 12%. This is what I'm talking about. This is what the institution pays, right? So this would be 6 to 8% for what would be paid out, right? What we pay to our community or somebody else. So I think right today the rates are artificially high, and as long as bull run is here, it's going to continue, but it's going to find sooner or later it's going to find its way. But the yield on USDC is a great indicator for everyone who's watching the show to tell you if the bull run is here or not, because the first thing that happens even before Bitcoin prices start going down is that the rate on stable coins is coming down. And if the rate is coming down, that means there's less demand for buying on margin. Less demand buying on margin means Bitcoin is probably hitting its high, and so on, so on. So it's a leading indicator that all of you should be watching if you want to know when to park some dollars on the sidelines.
Sure, and today the rate keeps going up. So if you're saying for now we're safely in bull market territory. In fact, we'll highlight to our viewers when the rates start coming down. Alex, we've got about 3 more minutes. I want to talk to you about another story that we wanted to talk about, and that is the move from gold into Bitcoin. Now, we know that Bitcoin has disrupted gold, but it seems to be happening a lot faster than I thought. And we had big gold bulls this week saying, actually, we're moving our gold into Bitcoin. We're uninvesting in gold. We're selling our gold positions. We're moving them into Bitcoin. And even Peter Schiff put out a tweet. I mean, listen to this tweet. He says, now that Bitcoin has hit 50,000, I must admit that a move up to 100,000 can't be ruled out. I mean, even Peter Schiff is saying that Bitcoin will probably double.
Yeah, I think even the biggest deniers decided that they look completely stupid and they need to at least say something positive about Bitcoin. But I would make a distinction. Look, Bitcoin, gold is really tied directly to the price of the dollar, and when the US dollar has a little bit of a recovery, gold usually takes a retrenchment. So it's Bitcoin and gold don't really either compete or necessarily run together in the same lane, right? So the dollar and gold run in the same lane. Bitcoin sometimes is correlated, sometimes is not correlated. Like yesterday, the market was down, but Bitcoin was doing fine. Normally, there are many, I can show you 20 charts where Bitcoin was basically behaving in a 100% correlated way to the stock market. So we want Bitcoin to be decoupled from the stock market, but we haven't really seen that in a consistent way. And the same thing with gold. So we don't, this one move by itself, if we just kind of distill that down, does not necessarily represent a trend.
Alrighty. Alex, let's keep it at that. We want to try and keep these under 30 minutes. The YouTube algorithm loves us. And speaking of the YouTube algorithm, I see there's 1,250 people watching and there are 300 likes. So come on, guys. Smash those likes so we can get this content out the rest of it. Oh, there we go. The likes are starting to fly. Thank you to all of you who are here, who are smashing likes. Help us help you. The more you like, the more we can bring you this amazing content. Alex, we will see you again next week, same time, same place, 8:30 EST. For anybody else who's watching, my show comes up at 10:30 a.m. EST, which is in 1 hour, and we're going to be talking about specifically the Binance chain. So I'll see you guys all in 1 hour. Alex, we'll see you next week.
Great to be here, and thanks everybody for coming, for watching.
Thank you, Alex. Thank you. That's Alex, and this is actually his show, which is called Save Our Crypto. Next coming up on Crypto Banter is BTC Secrets with me, CryptoManRan. Do not miss this show. Trust me, there is a big DeFi boom going on. This is a bigger DeFi boom than the DeFi boom that I saw on Ethereum, and it's happening right here on the BSC chain. I'll see you again in 1 hour.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.